Good afternoon. I'm Chris Knott, and I'm the partner that heads up the R&D incentives team here at Parry. Welcome to our R&D seminar, and thank you for coming. It's good to see so many of you join us, and hopefully we can let you leave at the end of the hour knowing a little bit more than you do now. I've got a couple of my friends and colleagues with me, Donna Challoner and Mark Frost, and they'll introduce themselves when we get to the sections that they'll be leading. We've also got Steve Whittle producing away in the background. And so as well as doing that, Steve will be taking your questions and passing them through to us. So please, today is for you. Ask away during the sections, during the Q&A, and we'll try and get through as many of the questions as we can. All of them if we have time. If we don't, we'll simply answer them offline at the end. So anything you've ever wanted to ask about R&D, didn't know who to ask, that's what we're here for. When we were thinking about this, we realized that between the three of us, we've got 38 years of experience of advising on R&D reliefs. So hopefully that will help during the Q&A. So what we're going to try and do is to pass on some of that experience by basing what we tell you about on the questions that we get asked the most. So what are we going to cover? Firstly, I'll be taking you through some of the basics, who's eligible, the $64,000 question, what's R&D? We get asked all the time, of course. Mark will then be looking at the use of R&D to maximize cash flow and some tips on how to get claims right. This has obviously become far more important in the current environment. Donna will then take you through the impact of some of the recently introduced government measures on R&D claims. Throughout the whole thing, we'll sprinkle in a bit of news and knowledge about what we're hearing specifically from HMRC and pass that on to you in terms of this is what we're hearing, this is what they're telling us. And so you then know what we know. So I'm going to kick this off with who's eligible. So essentially, you need an entity that's subject to UK corporation tax. So that usually means it's a company or a partnership performing a qualifying R&D activity. And I'll go through what's a qualifying R&D activity in a minute. What you receive is dependent on your size and to which of the two regimes you fall into. So either you're an SME or you're large. In order to qualify as an SME, you and the other members of your associated and linked companies worldwide, they talk about linked enterprises and partnership enterprises, and there's various rules around that which I'm not going to go into, but essentially it's not just your company, it's everybody that you're connected with to an extent. And you need to have fewer than 500 employees and then pass one of the two financial tests, being no more than 100 million euro turnover and no more than 86 million euros of gross assets on your balance sheet. And if you meet those criteria, then you classify as an SME, which allows you to broadly obtain about 25% benefit or 33% benefit compared to qualifying spend, depending on whether you are profit-making or loss-making respectively, and hence you get either tax saving or cash benefit. So cash back at 33%. If you're not an SME, then you're large. That's how it works. There's no definition of large. It's just you don't fit the SME criteria. Large companies claim what's called the Research and Development Expenditure Credit, the RDEC, as I call it, and everybody else does, which is akin to a taxable grant. And so this increased on the 1st of April 2020 to 13%, obviously taxable at the normal CT rate of 19%. So broadly, the net benefit on the RDEC is now running at about 10.5, just over. So these are things that can get you very large amounts of benefit back. And so worth getting right, worth having a look at, worth seeing if you qualify. And that leads me on to the big question. What's R&D? And this is something that I've championed for years, having done this for the full 20 since it came out back in 2000. And one of my favorite lines has always been, stop calling it R&D, because it's not. If people say about R&D, it conjures up the usual images, and the line that's used most often, I actually don't like, is the people in white coats. But that's what you get. They did that. People think about the R end, the blue sky stuff, the farms and chems, rocket science. That's R&D, and yes, it is. If I just dealt with over 20 years what I'd call R&D outside of work, I'd have only done about 6 claims. And so it's not that. So what is it? You've got to realize this is a tax definition. It's not a societal one. And so we need to have a look at what do they actually mean? What are they trying to actually reward? And so there's a whole bunch of obviously tax legislation. There's then inspectors' manuals online, all of which you can go read. But actually it boils down to just 2 things. And the way I always describe it is change and challenge. As long as you can hit the button on the 2 C's, you're absolutely fine. So what do those two mean in just a little bit more detail? When we're looking at change, we're looking at anything that you've done to your product range that has changed it in some way. Anything that you've done to your manufacturing process that's changed it in some way. So these can be things that have made your products quicker, faster, lighter, stronger, more durable, different materials. In practical sense, value engineering, environmental considerations. You might always sell your products to Saudi. Metals expand. Great, we can deal with that. We built that in. You then start selling to the Nordic companies. Oh, we've got a bit of an issue now because suddenly all the metal's contracting. So those kind of environmental considerations. And it's not just for new products. Misconceptions everywhere with R&D, right? New products, yes, absolutely, of course. Possibly more likely to have things that would hit the qualifying definition because they're new. We've not seen them before. We don't quite know what to do with them. But actually, it's just as applicable for existing products. And so if you're not just standing still, if you're trying to change product range in some way and make some of those changes that we've listed out, then that can qualify too. Look at manufacturing process, because that can also qualify. So things like increasing efficiencies, yields, decreasing wastage, increasing traceability, recyclability, all that kind of thing qualifies. And if you take a step back, that can be across any sector. So when I first joined CP 3 years ago, I sent out a kind of a mindset grabbing. Basically says for all of our entire client base, if they're not a wholesaler, buy something in, store it for a bit, sell it on. Not done anything to it. Okay, they don't qualify. But if they're not a wholesaler, just about everybody else, bit of service industry, maybe not. But just about everybody else, especially if you make something, you're going to be doing something that hits this definition. You're not just standing still. I don't believe for a second there's an engineering or manufacturing company out there that's making the same things in the same way, from the same materials, for the same application engineering, there's another one, as they were 2 years ago. I choose 2 years because you can go back and claim 2 years ago from the end of your accounting periods. Because if you were, they wouldn't be buying from you anymore. They'd be buying from your competitors down the road because they've continued to develop. And I think it's the D end of R&D that really gets forgotten in this, and where the vast majority of our claims are actually made. And so that's the change. The other bit is challenge. Now, the line in the legislation actually talks about there needing to be an element of the resolution of technological uncertainty. Challenge. Did we have to put some thought into making those changes? Did we know when we came up with the idea of making that change exactly what we needed to do to make it happen? When does that ever happen? Did we have to spend two very strong positive correlating factors? Did we have to spend some time? And we've got very clever people in the building who've done this for years, and it still took them 1 month, 3 months, 6 months, 12 months. You guys know in your industry what is a time frame to use for that. Software development can also qualify, and hence sometimes their lead times are a bit shorter, but it applies equally. So is there some time, and is there some testing? Because if you're having to do tests at various points along the way, well, what are you doing? What are you telling us? You're telling us that we're not quite sure. So we're just going to check as we go along whether we're heading in the right direction, away from that point A, that pot of knowledge we've got, to that new point B that we're trying to get to somewhere over here, of the new knowledge and new things we're going to take to the market. If A to B is a straight line in 3 days, great, okay, that's lovely. You've made it work really quickly, but chances are there wasn't enough technological uncertainty. If actually you've jumped away from A, we've gone round and round an iterative design loop, or it's a jagged line with all these blind alleys that you've gone up and then had to reverse out a bit with, okay, well, that seemed to work in that area, but not in that. So let's have a think and have a change. Getting to B is now taking some time, some technical elements are being tested along the way. You're not sure, you're having to check. So that says to me, it would take to HMRC that if I have to check, we're not quite sure. So there must be inherently some technological uncertainty. And that's an overarching point worth making, is that these changes that we're looking to make have to be scientific and technological in manner. And so that's why the kind of sectors that I've chosen to mention so far, your engineering, manufacturing, food and drink, IT and software development, printing, there's lots of them, but it has to be that kind of thing. And so I think what we'll do now is we'll pass across to Mark, who's going to look at more at cash flows and increasing claims. And Steve, have we got any questions at that point before I hand over to Mark?
No, nothing at the moment.
Okay.
Brilliant. Thanks, Chris. I'll pick it up. So good afternoon, everyone. My name's Mark Frost. I'm a director in the R&D tax incentives team at Cooper Parry. So I work with Chris day in, day out, and Donna and the rest of the guys as well. And as Chris said, I'm going to talk about some key bits of thinking around how to maximize your R&D claims. And we thought this would be a useful topic to cover right now, particularly in the current climate. Cash is key. It's always key. Companies are under a lot of strain at the moment, and your R&D tax incentives claims is one way to potentially free up some cash, much needed cash to get into the business, depending on a few things. So I'm going to talk about maximizing your R&D claims. And just to be clear up front, when I talk about maximizing R&D claims, we're talking about helping a company find all the R&D and all the expenditure that goes with that R&D that they should be claiming. So this is not about chuck everything in and try and see what sticks. This is about maximizing your claim within the rules and the guidance and the boundaries set by the government's legislation and rules that Chris referred to earlier. So there's a couple of key elements to this that I'm going to kind of weave in as I talk through a few points. It's not going to be an exhaustive list. There's just not enough time on a webinar like this to cover every element, and some of these things vary a bit from company to company in terms of exactly how to maximize it. So I'm going to touch on the things that will be relevant for any type of company. As Chris mentioned, so many types of companies across so many industries have the ability to claim R&D tax relief. So I'm going to touch a bit on what to look for, things to look out for, what to look for in terms of maximizing your claim. I'm going to touch on a little bit on process and how to go about maximizing a claim and what's the best way from our experience to do that. Donna will pick up then talking a bit more about some process related things and some other financial considerations. So what to look for in your R&D claims to help maximize them. And obviously, the key thing here around maximizing your claim is making sure, therefore, you're maximizing the tax relief or the cash benefit that comes out of your claim, and therefore the positive impact that can have on your cash flow. I'll come back to the timing element in a minute, because there is an important timing aspect here, because I know it was always with cash, you want it now, as everyone does, right? There's a timing element that I'll come to, I think, at the end. So in terms of maximizing your claim, I'm going to start with a bit on the how and the process. So the way we work with our clients is we tailor our approach depending on the client at hand, depending on the company, depending on what their claim might look like. For most of our clients, though, one of the main steps we do in our R&D claims is what we call the R&D workshop. So this is spending 2 or 3 hours, and sometimes it's more, sometimes it's spread across a couple of sessions. It used to be at the client site, at the premises. Recent weeks, it's been over Microsoft Teams. That's worked fine. I think Donna's going to touch on some of that stuff in a little bit more. But fundamentally, doing this R&D workshop with somebody from the finance side of the client's business, somebody from the technical side. So often the FD, chief engineer, CTO, lead food scientist, maybe even the MDs in there, depending on the company. And in that 2-3 hours, the aim is for us to help the client, the company, understand that definition of R&D, that what Chris just talked a lot about there, understand what it means for their business. Because if you pick up the government guidance and the BEIS guidelines that were the main definitions documented, if you're not familiar with the R&D regime, it doesn't mean a whole lot to you, and hence why Chris just explained it in much more digestible language. So that's the kind of thing we go through to help everyone understand what is the government looking for when they're talking about R&D. But it's only through that conversation, digitally or physically face to face, that you can get to understand the company, understand the projects that have been done in that business, and hence help find all the projects that meet the government's definition of R&D for tax purposes. So that's number one, right, in maximizing your claims. Make sure you identify all of the projects that meet that government's definition. And that's usually the easiest place to start, right? But then even once you've identified all those projects, and Chris talked about product development, he talked about process stuff, it's broader than most people appreciate. So cast your net wide. Number one, identify the project. Once you've got that, great. But step two is think about all the activities on your project. So again, as Chris mentioned, it's not just in the core head scratching research bit. It's not just your perhaps your chief engineer or your lead food scientist or your CTO. It's not just the time they're spending coming up with some new product, for example. The activities within your projects that can qualify is much, much broader as well. And it's not even just limited to the key science or technical people in the business and the things that they're doing, design, development, testing, prototypes, field testing, whatever it might be. There's activities that sit around projects as well that qualify, and these are clearly documented by the government. This is not stretching the definition beyond an acceptable norm. And again, this is not an exhaustive list, but technical planning, it might not spring to mind as an R&D activity. Technical planning is an allowable activity as long as it relates to the R&D. Project management effort, people doing financial support for R&D projects, training as another one. There's a whole raft of activities and roles, if you want to think of it in that way, that's might not even sit as part of your project or sit around the project, that qualify once you've got a project that meets the R&D definition. So that's number two. Think about all the activities and roles, and it's not just as constrained as people typically think. It's much broader. Third point then brings you to the costs, and Chris alluded to this at the start. Once you've identified your projects that that qualify as R&D and the activities within them, you can't just chuck in all the costs that you've incurred doing those projects. The government allow you to claim certain allowable categories of costs that you can put into your claim. And again, I'm not going to go through an exhaustive list here. I mean, thankfully, usually it's the big costs that you would have incurred doing the projects. It's your staff costs, although not necessarily every element of your staff costs. You've got to stick to the government's legislation around certain allowable categories of staff costs even. External people costs, contractors, subcontractors, again, there's a few more rules in there depending on whether you're an SME or a large company. But you can consider and should absolutely look at external cost incurred, paying external people to get involved in your R&D, and there's a few rules there as well. Consumable costs around materials, so being the obvious one, materials involved in building prototypes. Again, there's a few more detailed rules behind the scenes you've got to be careful on, as well as things like software licenses and things that sometimes get overlooked, like reimbursed expenses, because that was a hot topic a few years ago. So there's certain allowable categories of costs that the government let you look at and claim, but you've got to start, number one, at looking at your projects and making sure you're thinking about the R&D definition and finding everything in your business that qualifies. Make sure you pick up all the activities within those projects, and then make sure you pick up all the costs that sit alongside it, working within the government's rules around the allowable types of costs you can claim. So there's those three main steps that no matter what type of claim you're making, no matter what type of company you are, those steps will apply. And then obviously there's slightly more nuanced things depending on the particular claim at hand. So if you do all of those three things, you're going to be on the right path to maximize the size of your claim, therefore maximize the amount of benefit you get out of it, that 25% or 33% Chris talked about for the SMEs, or perhaps more akin to around about 10% for the large companies. But there is a timing element here, right? So circling it back around to cash flow, and yeah, ideally it'd be great to have that cash today, right? It'd be great to do your R&D claim, stick it in and get that cash today. It can be quick to do your claim. It can only take a few weeks. I've done it in a day before. I've helped clients pull together sizable claims in a day. I wouldn't recommend it. I'll have a lot more grey hair if I do many more of those. But it can be done very quickly. Once you get your claim submitted, so you have to update your tax computation for the year at hand, you have to submit that. The government are doing an amazing job, actually, of by and large sticking to their 28-day review window for reviewing claims, potentially a few more days on the top of that for actual any tax repayments or cash credit repayments to appear in the company's bank account. But within a few weeks, you could be looking at getting your hands on some of that much needed cash from HMRC through doing your R&D claim. And I think two final points I'll touch on before handing over to Donna. historic point. So Chris mentioned at the start as well about the government you've got a 2-year window to submit your R&D claims, even if you've already submitted R&D claims for your previous 2 financial periods. You've got the option to look at them, reopen them, uplift them. And most new clients we work with these days, we look at their last 2 claims, and most of the time we find qualifying expenditure that has been missed. And hence those companies are well within their right and their permission to uplift those claims, submit those claims, or resubmit them. So potentially, if you're listening to this webinar, you're potentially sitting on cash in those old claims, even if you've submitted them already. There might be more to go at if you haven't fully appreciated some of the definitions. So there's that historical element to it. And the final point I'll touch on, and again, it's kind of thinking of cash flow, and I guess investment decisions. Obviously, right now with the way things are and the uncertainty around the economy and what's things going to look like in 3 months or 6 months or 12 months, there's a lot of businesses pausing or perhaps taking a lot more time and a lot more thought over investment decisions and decisions whether to invest in that, researching, developing that new product or the new version of the product line, or maybe even an investment decision around investing in internal IT systems, where, as Chris mentioned, you can find R&D in those internal IT development projects. So with that future-looking consideration, I see some clients considering R&D tax relief as part of that business case. So if you've got an investment decision around an IT system or pressing ahead with that next product line or whatever it might be, and there's a business case consideration as to whether to do it now, is now the right time to invest the money in that, it's always worth considering R&D tax incentives as part of that business case decision. You never know exactly how much R&D you've done until you've done the project, but up front, it's usually possible to have a look at a project you're going to undertake and think, you know what, if we're going to spend £300,000, maybe there's £100,000 here that feels like it's going to be spent doing stuff that qualifies as R&D. And if you're an SME, you might be looking at £25,000 of that effectively the government will pay for through the R&D tax relief regime. There's a timing consideration, right? You're not going to get that cash up front before you start that project. It's going to be after the event. It's going to be at the end of that financial year, because that's when you can put your claim in. But hey, every little helps right now, right? So that was everything I was going to touch on. There's those three key points. To sum up very quickly, there's 3 key points around maximising your claims projects, activities within the projects, understanding the definition to make sure you pick it all up, make sure you pick up all the costs, and there are some nuances in there that get overlooked. And with all that in mind, thinking about that from a timing perspective with your historic claims and potentially your future claims to kind of help maximise your cash flow position. Steve, are there any questions come through at that point before I hand over to Donna?
Yeah, so as you started your talk, loads were coming in for Chris, so we'll save his, but then loads have come in for you too. So can you do the whole claim remotely during COVID?
I'll let Donna's going to touch on that point specifically, and she's also going to touch on some of the more points around some of the government financial assistance right now and the interplay with the R&D. So Donna will answer that point, and if she hasn't by the end, we'll circle back to make sure we do fully answer it.
No problem. Okay, so from James, to what extent is this undertaken as a desktop exercise? Do you need to spend time on the ground if the latter is COVID-19 hindering the exercise? So I guess that'll be the same answer, won't it?
Yeah, Donna's going to pick up on that exact point in a second as well.
Okay, so I think a lot of these questions will have to take to the Q&A at the end then, I think.
Okay, cool. Okay, I think Donna, over to you then.
Great, thanks for that update, Mark. So as you can see, research and development is extremely complex, but we're here to help you understand it, and hopefully the task shouldn't be too onerous with our assistance. So I'm Donna Challoner. I'm a senior manager within the R&D team, and I've been working with clients to make R&D claims for a number of years. But what I don't want to do, and certainly the guys in the team don't want to do, is to come into your business at the end of the year prepare your R&D claim and then disappear. That isn't what we're here to do. We're here to give you advice throughout the period and have a look at things that could potentially impact your R&D claim. So supporting you to make those decisions before something could have a detrimental impact on the potential claim that you could have. So we've probably all heard of Innovate UK grants that are deemed to be a notified state aid. So the reason that is important to your R&D claim is the SME regime is also notified state aid. So you can't receive a grant for a particular project and then also claim R&D relief under the SME regime. You can claim under the large regime at the reduced rate of sort of 10.5% that Chris was talking about before. Now, why is that important during these current circumstances? Well, like the Innovate UK grant, the new CBILS government funding that is available is also deemed to be a notified state aid. And therefore, we've seen so many companies that are applying for that loan without really talking to their advisors, without knowing whether that will have an impact on their R&D claims going forward. Now, we've been in contact with the Revenue and we constantly get updates as to these new government support schemes that are available and how that will interact with your R&D claims. And what we've been advised is the application wording is extremely important. So basically, where that wording specifically relates to an R&D project or your expenditure on an R&D claim, then there's a good chance that will catch your project as a notified state aid project, and therefore you'll only be able to receive the lower rate of relief of approximately 10.5% as opposed to the high rate of 25 or even 33%. So with that application, if your wording is around actually the more general business support and talking about cash flow and it doesn't specifically refer to your R&D projects, then it's unlikely that that will be caught under notified state aid, and therefore there shouldn't be an impact on your R&D claims moving forward. But if you do have any queries, if you've already applied for that loan, by all means pick up the phone. We're more than happy to have a look at that for you. So I know a lot of questions have been coming in terms of remote working and lockdown and how is that working. Now, for us, it's pretty much business as usual. We like to go out to see clients. We love to go out and see the prototypes, have a tour around the factory so that we can really delve into the projects and see what it is that you're doing. However, like Chris said, we've got so many years of experience between us that we know the questions to ask. We know the types of things that you'll be looking at, and we know where your projects will qualify for R&D relief. So therefore, we have been holding a number of meetings via Teams. We get the relevant technical people on the phone, we get the finance people on the phone, so that we can still do that end-to-end process. We can talk about the projects that you've been working on, we can explore those advancements, explore those uncertainties, and then talk you through each of those eligible cost categories that Mark was talking about, make sure that we really maximise your claim. And it's really important that we do that whilst in lockdown. Obviously, we're still working from home, so it's important to us that we make this work for you, because what we don't want is for that cash advantage to be delayed even further. So we are doing everything we can. A number of meetings are being pulled forward so that we can enhance and advance that cash flow coming back into your business. Like Mark said, there is a 28-day processing timescale. We don't just submit your claim to the Revenue and then sort of leave you to it. We constantly make sure that we keep in contact with the Revenue to make sure that they're hitting that 28-day processing timescale. And if they're not, we're available to contact them and we can try and push that through for you so that you can get that back as quickly as you possibly can. Now, with regards to furloughed staff, again, that's a number of queries that I've been receiving from clients. So where some of the technical team or some of the finance team have been furloughed, you probably are aware that there is a minimum 3-week period to be on furlough, but some of our clients, to make sure that we can get these R&D claims turned around quite quickly, they're taking those pertinent staff back from furlough, making them available so that we can have the meeting, we can talk through the technical projects that are being worked on, we can pull all of the financial data together, and then if for whatever reason, those staff can't go back to work, then they can be re-furloughed again for another minimum 3-week period. Now, clearly, we don't just recommend that you do that. That's only if it fits with your business. But whatever we need to do, we will work with you to try and get these R&D claims finalised as quickly as we can. I think that's probably all I was going to add from a sort of furlough perspective and the impact of CBILS. So I think I'll probably come back to you, Steve, so that we can work our way through those questions that have been coming in.
Basically, it lost me there for a second. I went very quiet. No worries. Well, let me bring you all back in. Okay, so we have lots of questions that have come in. So I thought if we just work our way through, and you can kick it about amongst yourselves, or you can jump straight in. So we had one from Nicola. Can a claim be backdated as a product is not live on the market yet?
Yeah, sure. I'll pick that one up. I did spot another question about how often can you claim, and so I think we'll link those two together and kill two birds with one stone, effectively. Can a claim be backdated? Yes, it can. We've mentioned a couple of times this 2-year rule. That's 2 years from the end of the accounting period. So just to make that very clear, if you're a December year end, as we stand right now in May 20, you have until the end of this year to or amend, as Mark said, the claim for your December 18 accounting period. So as we stand right now, you've actually got the ability to go back and have a look at what you were doing from the 1st of January 18 onwards. So it's quite not only is it a generous benefit, it's generous from a time perspective in letting you sort of retrospectively go back and have a look. The element about your product not being live, that's absolutely fine. You're still working on it, you're still make it work, and to sort of, as long as you are hitting that definition in terms of the work that you're doing, then it's okay to claim. I think it's also worth mentioning at this point that even if you get to a point where you give up, because right now it's just too hard, it's going to cost too much, the technology's just not quite there. So do you know what? We're going to shelve it for a couple of years and we'll go back and have another look. Because the revenue, you're asking you to sort of these sort of advances, these improvements, these appreciable improvements they talk about in terms of that change that I mentioned earlier. So the wording is an overall advance, appreciable improvement for the sort of new or existing products. As long as you're hitting that definition, I wouldn't expect, and neither would HMRC, for you to manage to get it to work every time, because the word appreciable is in there. And so if, and it's a bit of a grey area in the art of R&D, as it were, but if you're saying that everything we do works, I would start to question, and so would they, the level of technological uncertainty. How difficult was it? How much challenge was there? So actually, whilst it's not good for you from a time or cost perspective, we like to see a little bit of failure, quite frankly. And so not complete failure that you're having to shelve it and waste the time and money, of course, but occasionally that does happen. And so the product not being live, absolutely fine. Products are naughty. They don't finish on the 31st of December or whatever your year end is. And so you can claim for a product or a development project across several years if you're still working on things that hit this definition. How often can you claim? Every single year that you're making stuff and you're performing activities that hit the definition. It does mean that every year you do have to tell HMRC about it. You can't rely on, we put a claim in, we're okay for 3 years. That's not the case. You have to keep telling them what it is that you're doing this year that's met the definition. So I think that hopefully deals with both of those questions in one.
That's fantastic. We have another question, and it mentions furlough. We thought it might. Does the furlough scheme affect an RDC claim? In particular, thinking of IT development team, which normally qualifies but are now furloughed.
Do you want me? I'll start on that one. I'm just trying to think if I understand the question correctly. So if you've got an internal IT development project, I think as Chris mentioned at the start, that can qualify as R&D. You've got to do the usual thinking about, does it meet the R&D definition, the advance in science or technology and resolving scientific and technological uncertainty. With most IT projects, it's rare that it's all the project that qualifies. It's probably parts of it, perhaps. And the government released some guidance. Their latest guidance around claiming IT projects was released in October, November 2018, which was the first guidance they'd released since 2000. So if you read the old 2000 guidance, it talked about search engines because that's when Google was really coming to the fore. So it needed updating, and it's pretty good actually. So I guess there's that consideration. Internal IT projects can qualify, and then there's a lot of clients we work with who make such claims. It's back to the usual R&D definition and making sure you identify the project or the bits of the project that qualify. And then the part about whether your IT staff are furloughed, I guess it depends on a few things. If you're looking back at a previous year for work that those people did, before they were furloughed, that's fine. That'll just be whatever work and expenditure that went with it was done earlier this year or in previous financial years. If you've got an IT project that was going on, I guess now, and has been interrupted because people have had to be furloughed, you'll still be in a position when you get to the end of your financial year to look at and consider what was the R&D they were doing, before they went off on furlough, and what's the R&D that they've done after they've come back from furlough, and that same definition will apply. And again, it's marrying it with the expenditure involved. I hope that's answering the question. I don't know if there's another angle there, Donna or Chris, that you're thinking as well.
No, I think you're absolutely right, Mark. I think in terms of record keeping, it's going to be really important moving forward that when we are looking back at an accounting period that has included a period of furlough, that we're not claiming for any of that staff cost that's being provided by the government within the claim, because that's not incurred by your business. So I think there'll be a lot of help and support given by us to our clients for those particular periods of furlough, because obviously whilst your staff are on furlough, they're not seeking those advancements and overcoming those challenges. But yeah, as soon as they're removed from furlough and they're back within the business and they're hitting that R&D criteria, then yeah, it shouldn't impact that project at all.
Yeah, that's it. If they're at home, they're not going to be doing R&D. Whereas when they're back in the business and being paid for being back in the business, they might be doing R&D.
Okay, well, I'm going to ask two questions in one here. So R&D tax incentives sound too good to be true, but what percentage of claims are actually paid by the HMRC? And the second part of this question is, how much does it cost to make a claim?
You want to pick that up, Chris?
I guess so. Yeah. Well, I'll deal with the. There's two very distinct elements there, isn't there? I think the first one, what percentage do HMRC actually let through? That's a difficult one to answer on a percentage because they don't release those statistics. What they do release is every September we get the national R&D statistics for the year. When we say for the year, it usually runs a couple of years behind. And so all I can do is refer to the ones that came out in September 19, because obviously we're not there for this year yet. And that was actually the stats for 2016-17. And what we do know is that the amount of cash, be it cash back or tax saved, that was paid out by the Treasury back in 2016-17 was 4.4 billion. I think it's pretty safe to say 3 years on, we're well over 5 by now, because even that was a 14% increase on the year before. So a lot of claims get agreed. There isn't enough R&D going on in the pharmaceutical sector for it all to be them. So about it being across many, it's absolutely true, and they even break that analysis down. And something we can send to people if people want to see it. Obviously, we know where to find it. We've got ready access to it. We can send out the analysis if that would help some people. From our end, I think a lot of advisors do make claims. 100% of our claims get agreed. Well, yeah, 100% of every advisor's claim gets agreed. You're just not telling you how much they get knocked off to get it through. So there's a bit of a red herring in there, which always amuses us whenever we see a company make that claim, because every single R&D advisor in the world could say the same. But being perfectly honest, in the 3 years since I joined CP, we've had approximately 2 inquiries a year for the claims that we make. And so I think it very much depends on your advisor, who you're looking to help with your claim, the knowledge that's being applied into making that claim, and the relationship that you have with HMRC, your own risk assessment with HMRC. I think one of the things that people may have seen online is I'm part of a working practices group within CIOT to try and raise the standards within the R&D claims industry. One of my best friends described us as the PPI salesman of tax, which was unkind. Where it comes from, and so part of that is about sort of people just throwing in sort of various things and just hoping. And so there is going to be some guidance coming out from the CIOT themselves about how to choose your R&D advisor, and just helping companies to make sure that you claim someone who help or claim through someone that knows what they're doing. And so that might not be us. There are others who would hit the spot as well. But I think that's long overdue and long needed in the industry.
And the only other point I might add to that, in terms of that, back to that point around what percentage of claims are successful, with our experience up front, we can tell pretty easily if there's a claim to make or not. But what we can't tell up front is how big, if there's a claim to make, how big it is. So there's lots of companies we speak with week in, week out, and it normally only takes about an hour's conversation over a video conference or over the phone, even, or face to face when those days return. And all it takes is normally about an hour to actually chat with a company, chat with the FD, the MD, maybe one of the lead technical people perhaps, to actually get a feel, is there a claim to make here or not? So you can normally tell pretty quickly if there's not a claim to make, and hence, there's nobody's time gets wasted ploughing on with making a claim, and then you actually send it to HMRC and they reject it. We'll know upfront whether there's a claim to make or not. What we don't know is upfront exactly how much there is to claim. So there's a lot of companies we speak with week in, week out, just for an hour on the phone, to help them see have you got a claim to make, and if you do, let's figure out the best way we could help you if you want some help.
In terms of answering the second bit, in terms of how much it costs, that's something that you need to look at on an individual basis, quite frankly. I know that feels like ducking it a little bit, but that's the case. I mean, some companies do send out a blanket. This is a lot of R&D claims are done contingently. Then we're in it with you. The cost will get covered by what you get back. Our equivalent of no win, no fee. But some companies have done their own claims for a while. They kind of know what they're doing, and they've got the time to be able to devote to do it properly. And so there's a whole range depending on how much help you want, your own risk profile, whether you're a first-time claimant. There's various sort of factors that HMRC tell us makes your claim more likely to be looked into. First-time claimants, claims where they've been increased quite a lot, claims where there's no report. Sometimes the company doesn't even get to see the report. So all of those things would increase the amount of work that you would need. And so sometimes you need full claims, full help, us to come in with our experience or others to do the full claim with you. Sometimes it's just a case of we're happy to do it ourselves. We just want a sense check from you guys in terms of does this look and feel and smell about right, and does that give me a warm fuzzy feeling that the inspector's going to get? And so sometimes we do sort of workshop and review claims, as we call them. So it really very much does depend on what you're looking for. And I'm quite happy to say that we don't do a one size fits all. It's very much like to Donna's point, we're in it with you. We want to build a long-term relationship, and so we'll have that discussion and come to something that's works for both sides.
Okay, cool. Well, we've got so Philip has followed up on the furlough question. I think I asked it really badly. Read the furlough question. The IT are furloughed. Thinking of the cash you get from the government, will it affect a 13% claim?
I think that's probably your point, Donna, isn't it, around the interplay of furloughed staff with making a claim?
Yeah, so I think for the staff costs, you would basically pro rata their staff costs for the period that they were actually live on that project. So in terms of the money that you're getting from the revenue, that's for the period that they're not working on that project. So therefore, it shouldn't have an impact on that 13% RDEC claim.
Okay, cool. So hopefully that answers this question after my bad questioning. Just to highlight to everybody who's on the line that if you are making a lot of points on here that I might not be answering back to you very quickly because I'm trying to get the questions out to the team. So if you are telling us that you're going to contact us or something like that, we will get back to you, and I'm not just ignoring you. But to our next question, can you still claim if you are outsourcing part of the development?
Yeah, I've seen that one. There's also one around including overseas as well. So I think I'm going to try and link two together and to help get through them. It depends on the size is the answer to the question. And there's different rules regarding those two different regimes that we mentioned earlier on as to whether you're SME or whether you're large. And there's two different elements to that outsourcing. So the first one's called EPWs, which is externally provided workers, which is essentially, to all intents and purposes, they would look and feel and smell to an external person like they are part of our workforce. So they quite often they may well have a firm's polo shirt with the logo on like everybody else does. They're working on premises more often than not, but not necessarily. But the real test is that they're under our supervision and control. So we're telling them what to do. We just needed a few more hands on deck. So quite often this is the likes of agency staff. So those EPWs are claimable by both SMEs and large companies. There is a restriction as to how much of their cost you can claim, because effectively you're paying the agency or the middleman, if you like. And so the government will strip out the profit element and pay you a lower amount. But essentially for those people that are EPWs, you're allowed to claim on both regimes, both SME and large. There's a slight difference where you don't quite know how to do it yourself. And so bringing in any number of people from outside, and so just go back, EPWs can be overseas. And so if you're actually supervising and controlling people using teams, and becomes even more so in the current environment, that could be possible. Overseas costs, EPWs are absolutely fine. So looking at the alternative, which is subcontracted. So with these guys, so this could be something where you've got some particular fire regulation testing or some kind of certification or some kind of work that you either can't do yourself, you haven't got that knowledge, or you're not allowed to do yourself, you can't self-certify for fire regs, etc. So we have to subcontract out those costs. We have to absolutely black box out that activity to someone else to do. They tell us the answer and we feed that into what we're doing. Now, the difference of that is that's almost always off-site. Someone else is doing it. We're not telling them what to do. We're just asking them for the results of a certain activity so that we can feed that in. So that's subcontracted R&D. SMEs are allowed to include those costs, again, restricted. Large companies aren't. So that's the one difference there to be careful of. So SMEs, all fine. It's just deciding which bucket it goes in. Large companies, we always need to have a bit of a closer look just to make sure that it's EPW, we can include it, or actually subcon, no, we can't. So I think that answers both the outsourcing and the overseas questions in one.
You see, you're good, Chris. Very good.
Been doing it a while.
So what impact does private equity ownership have on the SME definition? And that's from Adam.
Great question.
Do you want to pick that one up? Yeah, it depends. You're right, as Chris mentioned back at the start, when you're thinking about are you an SME or a large company, you've got to take into account the whole group at hand. You've got to look at the ownership of it as well. So if you have got a private equity house that owns 50% or greater of the company at hand, so 50% or greater of the voting or capital rights in the shareholding, you've then got to take into account when you're evaluating those limits. Chris talked about the 500 employees and the 100 million euro turnover or the 86 million gross assets on your balance sheet. Those criteria, one of the financials you've got to be under to be an SME, and you have to be under the headcount, the employee headcount as well. When you're evaluating those criteria with that private equity and under that scenario, you've got to take into account that the turnover and headcount of the PE house, and then potentially, again, depending on what else the PE house has got stakes in, percentages of other investments of theirs. It's it's one of those it can become one of those very tricky areas. So potentially, if you do all that and you evaluate it properly, looking at the ownership and aggregating in headcounts and turnovers and balance sheets, you could still be under the SME criteria, under those thresholds, and you're still in the SME regime, and you're fine. It might be you've breached those SME limits because of that ownership structure. And then you're into the large company regime.
Yeah, the one thing to add on to that, because PE House is always a bit of a bug, frankly, is that you could get very much a pretty new startup that's PE backed because you need some cash from somewhere, getting dragged into being classified as large when clearly you're nowhere near it. But if you've got that greater than 50% shareholding, then unfortunately you get dragged into counting everything else. Like Mark says, the one thing to do with sort of PE ownership is that so that greater than 50% is known as a linked enterprise, and you have to include all of those. So all of the number. So if you're at 51%, you have to include all 100% of the staff number, all 100% of the turnover, which you can see if that then spreads across a PE portfolio, you can soon get in trouble and be classified as large. Normally for what's called partner enterprises, where you've got 25% or more of a shareholding, but less than the 50, then what you normally do is you take the relevant percentage. So if you've got a 30% ownership, you take 30% of the staff number, the turnover number, etc. Now, the good thing about PE ownership is there is an exemption. So a PE house there won't be any consideration around partner enterprises for PE-backed companies. And so as long as you keep that PE ownership below 50, or 50 and below, you're absolutely fine, because anything below 25 gets ignored anyway for everybody, and there's that exemption between 25 and 50 for the PE type companies. So that's worth mentioning.
It can be one of the trickiest bits, kind of getting that right, but it's a good question, because you got to make sure you're claiming in the right regime, you're claiming the wrong regime, and it's one of the areas that you see people overlook. Because actually they're perhaps not aware of those rules around the ownership and taking it into account, and hence people start claiming under an SME regime when they should have been claiming under a large company regime, and then you're in for a world of pain potentially. So it's a very important point.
Excellent. So I have a question from Simon. Now, you may have covered parts of this, so you might be going over all ground, but are R&D claim refunds at risk from offsetting from HMRC in relation to VAT deferral and or PAYE time to pay arrangements? I can ask it again, it was a big question.
Yeah, I'm not sure I understand the question.
No worries. So Simon's asking, are R&D claim refunds at risk from offsetting by HMRC in relation to VAT deferral or PAYE time to pay arrangements?
Right. Okay. Yeah. Got it. Our VAT colleagues have actually been looking at this because with other cashback arrangements in other areas of tax, that has been happening, and so yeah, the government have grabbed the upside, and which kind of defeats the object, doesn't it? And they have been offsetting. The question has been asked about what's their view on R&D, whether they'll be doing the same, and we haven't had the definitive answer come back on that. So the question has been asked, and so whoever it was asked that question, we will keep an eye on that. When that particular answer does come back, we will send that out specifically to you.
Really good. Okay, so another big question. So hopefully I won't mash this one up. So this is from Steve. Many businesses are in the middle of changing internal processes and systems and procedures due to COVID. Could this qualify? Also, say bringing in extra HSQE style procedures to work to new client guidelines, could this fit in?
Can you just read that again, Steve? The first bit particularly about processes and was it internal procedures?
Of course. So many businesses are in the middle of changing internal processes, systems, procedures during to COVID, could this qualify?
Yeah.
And then the next part was, say, bringing in extra HSQE style procedures to work to new client guidelines. Could that fit in?
Yeah. So on the first point, again, this goes back to what Chris mentioned right at the start. So the R&D definition is a broad definition, and it does talk about process improvements, where you're designing and developing a new process or appreciably improving an existing process. So when the question asks around processes, procedures, systems, there's a few things to think about, right? So if we're talking about business processes or financial processes, that's not going to qualify. Whatever you're doing with your processes has still got to tick that R&D definition, the idea of advances in science and technology and resolving scientific and technological uncertainty. So business processes, financial processes, it's not going to tick that. So you're really thinking, if we're talking about processes that of a technical nature in the business, manufacturing processes, changing the way you might, switching your business to manufacturing hand sanitizer gel or PPE, protective equipment or something, that could qualify. It's again thinking around what are the steps we've had to go through around whatever's new or whatever we've changed around these technical processes. So basic processes that have some rooting in technology or potentially science. And thinking about where they meet that government's definition of R&D, and that'll depend on the exact process, the nature of the process at hand, basically. When the question touched on systems, if it's talking about IT systems, again, it's a similar consideration. Again, if you've had to go through developing some new IT systems or enhancing your existing IT systems, again, the easiest way is through a conversation to kick the tires and see, has that work that's been done, those steps you've gone through to make those changes to the system, are they going to meet that government R&D definition? And with software, it can be a grey area. If more of those changes have been done by small changes to systems and small change configuring an IT system, that's probably not going to be enough to tick the box. If it's a bit more deep-rooted customization, integration of different systems, changing the underlying data architecture maybe to fit alongside your changes, then you might be in the kind of ballpark to claim again. And then the second, was that HS? Was that some question about health and safety? HS. What was the acronym you read out, Steve? I think it was something about health and safety, I presume, with changing health and safety procedures within a business as a result of coronavirus. Again, yeah, I guess it's kind of a process thing, isn't it? It's going to depend exactly what you've done. And again, if it's more around logistical processes, business processes, making sure people are working at a production line 2 meters apart, or that the way that they can use the machinery is conducive with them wearing a screen or a face mask or something, those sorts of things is again not going to qualify. If there's had to be something a bit more fundamental change to the way your business operates, and I'm thinking more manufacturers and engineering firms, I guess maybe food manufacturers, food science firms might have even more stringent requirements around this because of what's going on. It's always comes back to that R&D definition. That's where you've got to consider it. So without talking about a specific example, it's quite a tricky one to answer. But fundamentally, you've always got to go back to that R&D definition, and business process, financial process, logistical stuff is not normally going to cut that or tick that R&D definition on a process front or a procedural front. But fundamentally, it's something worth a conversation about and kicking the tires on, and it's one of those that quite quickly we'd be able to bottom out. Is there something to claim there? But I mean, at a higher level, I am expecting, and it's going to come a little further down the line, that the impact of coronavirus is going to drive R&D, right? Whether it's around companies adapting what they do to make hand sanitizer or protective screens, companies having to invest a lot in their IT systems because they're fundamentally changing the way their business works to be more remote or more digital. we're going to see that come. It's quite common that you see environmental, sometimes legislation changes, economic changes, it drive R&D. I remember seeing it through the last financial crash back in 2008. There was a huge amount of R&D that came off the back of that, particularly in financial services, where there was a whole raft of new legislation for the financial services industry, and that drove a phenomenal amount of change in the banks and the big financial institutions in terms of changing their IT systems in pretty fundamental ways. That drove a huge portion of R&D claims, certainly to 2009, 2010, even up to 2015. So I think we will see it drive some R&D, and I think it's going to come in many different forms.
Okay, that's really cool. So I just want to point out that I know that we are out of time now, but also I want to just say we have got a few more questions that we haven't answered yet. But what we will be doing is we will be sending out to everybody who attended today all the questions that were asked with all of our answers on there. So if we have to go back over anything, we can do that as well. But I just wanted to say that our very own Damien Shirley's been on, and to answer the question, one of the questions that we had to help you, he said we are seeing VAT crown set off against PAYE deferral, but not R&D so far. One to watch and seeking certainty.
Cool.
So would you like to go over and answer the rest of the questions?
Okay, so what we'll do, like Steve says, is we'll hand out answers to all of the questions that we haven't quite managed to get to yet. We now are just over the hour, so we will let you go. So what have we covered? We've looked at what's R&D. Hopefully that's made it a little bit clearer, if nothing else, to throw the definition a lot wider than people actually think it is to start with. We've looked at cash flow and how to maximize client in the current times, and we've covered the impact of CBILS and some of the other already existing government aid that's available. So we have got lots of different flyers for all sorts of specific sectors and industries, etc., with qualifying examples of the sorts of things that we've claimed for in the past. So please just ask if you'd like one of those. And if you do have any other questions that come up, then please do get in touch. Thank you for your time.
Cool. Thank you.